Hey, welcome everyone back to another episode of Forest Tat Magazine. It's your host Lewis here with you. Want to say good Monday morning to you. Hope everybody had a great, safe weekend. Now, before we get too far along, just want to go ahead and throw out this disclaimer real quick that Forest Tat Magazine and affiliates, nothing that we have said to you in the past or nothing that we're going to say to you today or anything that we're going to say to you in the future should be considered to be investment advice. All the information that we give out should be considered to be entertainment, educational purposes only. Okay, if you're seeking some investment advice, I highly recommend that you seek out the services of a licensed, competent advisor. Now that we got that out of the way, let's get into this today, folks. Also too, hold on one second. Let me go back. Want to welcome Easy Sarah QQ. Thanks for following us. All right, sleep more, grind less. Want to welcome you as well. Thanks for following us. And to all the folks who've been with us since day one, I want to thank you guys for following us so much, man. It means a lot to me that you guys trust our information that we're giving you here, and that you have decided to follow us and look at our videos and give us that support. And then for all of our new folks that just joined, man, I want you to continue to stay with us, and hopefully everybody that's with us, that started with us and that's going to come to us in the future and that's with us now, that you guys are going to get some great information, and it's going to help you to be better traders, right? Because that's essentially what we create this stuff for, is to give you the information so that way you can be better traders, and hopefully a more informed trader is going to be a better trader, and the better trader is going to allow you to be able to live that lifestyle that you want, and get some of that financial freedom that you want for you and your family, okay? All right, guys, so let's get over here and start looking at some of these trades that we put on last week. Now, remember how I always tell you is that when we first start out the show, we do the what went right, what went wrong, right? So we look at the trades that we put on in the past, and we look at, we analyze them, so what went right with them, what went wrong with them. Then we also, towards the end of the show, we start looking at, well, what are we going to do going forward, right? So what are the trades we're going to put on today? So we're going to get into that. Now, I will tell you, man, last week, I took it on the chin. My goodness, Friday was a tough day. And we're going to go back and look at each one of those trades that we did on Friday. And we're going to try to analyze and see what went right, what went wrong with that one. So the first one we're going to look at is the Great Britain pound Aussie dollar. And I got to tell you, I'm a little disappointed because when we first placed these trades, it looked like we were doing pretty good. We were doing pretty darn good here, right? And then something happened, and for whatever reason, it went the opposite direction of what we needed. Matter of fact, before we get too far into that, let's take a step back here and let's look at where we at dollar amount, right? Folks, you're not gonna believe this, man. We're down 3,200, right? 3,200. How did we get down 3,200? I don't know. How do we get back from here? That I do know. Let's look at why we got down 3,200 over the past weekend. Now, first of all, let me do some caveats on this right here, or let me do some we'll say disclaimers. Let me just go back and look at this for a second, right? So the 3,200 that you see right here is not an exact 3,200 loss, right? The account value started out was at $100,000. So the equity in the account right now is at $98,326. So almost two. So what? It's about $1,680 some dollars that we actually down. The reason why it says 32 here is because that is some of the profit that we lost, along with some of the equity that we lost as well inside the account. All right. Also, too, is reflective over here is our most recent trades, and not every trade that we've traded since the account was open. So if we just look back, it's just doing a look back from the 15th up until the 19th, and that's where we're getting that lost dollar amount and the loss in pips amount, right? So it's not like an actual account loss. It's just from the 15th up to the 19th, and it's on a little bit of equity and some of the profits that was in there. Now, the key takeaway from this is that even though you got a loss, if you got a plan, you can always come back, right? And I got a plan. I'm always the man with a plan. And you see me come back before from losses bigger than this right here. and I was able to turn around and end the week on a profit. Same thing here. We're gonna come in, we're gonna analyze what happened, what went right, what went wrong, and we're gonna try to make a profit before the end of the week. If you've been following me for a while, everybody knows that when I go through and I do these demonstrations, I try to provide uh, full transparency, so that way you guys actually see, the process as far as, what we do when we take a loss, and then how do we, turn it around and get back profitable after the loss, right? 'Cause I think it's very important. A lot of places, a lot of people won't show you a loss. Instead, what they do is just show you profit, 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 and get you to believe that, hey, you never take a loss. This will just be perfectly easy and everything will be okay. It's easy peasy. You're giving your money, you take a loss, and they were like, well, it comes with some risk, right? So we don't do that here. We show you the losses along with the wins, and let you make a decision whether or not it's something, if it's for you or not, right? The main thing to understand is that when you take a loss doesn't have to be permanent, right? A loss can be just temporarily if you understand how to trade in the Forex and if you understand how to get back on your feet, okay? So let's look at the ones that we traded that cost the loss. Let me take out my pen here. And I'm sorry, I'm a little unprepared this morning because I didn't have an opportunity to put my notes in the system like I normally do. I was actually on the phone with a buddy of mine and kind of got lost in the conversation that we were having. So didn't get an opportunity to come in here and normally do the update like I would like to do. But let's see here. So we did the Great Britain pound, Australian dollar. We did the CAD dollar. Let's see, Great Britain pound, CAD. Let's see, Australian dollar. New Zealand dollar. Okay, so it's 3 on Friday. All right, so let's close that because that's too painful to look at. I don't want to see that no more. All right, good. Got that out of the way. Let me make sure I got the right notes here. I actually tried to go in on all 5 currency pairs. I tried to go in on the Great Britain, New Zealand dollar, Great Britain pound, Canadian dollar, Great Britain pound, U.S. dollar, Great Britain pound, Japanese yen, and Great Britain pound, Australian dollar. But here's the thing: because I placed an entry order, right, not a market order. Remember we talked about the market order and entry order, right? Entry order gives you a set price for when you want to actually get into the market once the price crosses that line. Market order just says, hey, I want to get in right now. Because I did an entry order, right? Very specific target price that I wanted to get in at. It did not allow me to get into the market. And thank God it didn't, because I would have took a bigger loss than what I did. Because after the news cycle came out, price really did a rapid U-turn, right? Let's look at this here. So always remember, trade with a stop loss and an entry order when possible, and then place the place your take profits, right? Let's see here, where we at? 3 o'clock. And if any of this stuff sounds foreign to you, if you're listening to this broadcast and you're like, man, what is a take profit? What is a stop loss? What is he talking about when he says an entry order? What are these things? Well, go to the website. Go to Forex Tech Magazine. Excuse me, ForexTechMagazine.com. There's a free course there that you can take. Right? You can download, and all those things can be clear to you once you take it. Right? And that way you know exactly what we're talking about, and you better come in, and you'll be able to follow along exactly with what we're doing. Let's see, 83018. So it's right about here. And so yeah, this was a pretty man. Sorry about this, guys. Shouldn't take too long to get this put up. Let's put these numbers up real quick. This is the entry. Stop loss. Just trying to make sure this is the right numbers here. I think it's pretty sure it's the right numbers. 18, 3, 4, 1, 3. And let's put in a take profit. Take profit was boom, boom, bam. And also too, remember guys, this right here is a demo account, so it's not real money. So it gives us a little bit of a little bit of room to sit around here and play with some stuff, and to kind of keep some things going that we probably normally wouldn't do. But the ideal though is to if we practice it enough that develop the right habits, that when we start trading live, we have the right habits, right techniques, so it shouldn't be a problem as far as when we get in here to trade. But let's look at this trade right here, right? Excuse me, I'm sorry guys, I got a little rough throat this morning. So we put an entry order at 1.83018, right? Which is here, the blue line, right? The entry is in blue, stop loss is in red, and take profit is in green. And everything looked pretty good. So this right here was our 3 a.m. candlestick right here on Friday, right? Looked like it had made beforehand 2 a.m. like it made a little bit of a dip. 4 a.m. Looks like it was going up, but then all of a sudden, price turned down. And 5 a.m. right, 6 a.m., 7 a.m., 8 a.m. I mean, we were going to be profitable, going to our target. We were about 23 pips away from our target. 23 pips. 23 pips. That was all that was separating us from profitability. 23 freaking pips. Now, what happened that all of a sudden 23 pips we wasn't going to achieve it? Well, some information came out in the market, the news cycle, right? And when it did, the market did what? A U-turn, right? And a U-turn hard, especially around about the 12 o'clock hour. It went through our stop loss and continued to rally up. Man, that was tough, because we were almost profitable. Now, so what went right? Well, what went right was that our initial assessment was right about the market, right? Remember what I told you? Trade was happening right there in the market, not what you think is going to happen in the future, right? And trading, what was happening right then in the market was that the market was going down, right? This is a lower high, lower low, lower highs, lower lows, lower high, lower low, lower high, and obviously lower low. And then at this moment here, the market goes back up and it proceeds to create a higher high, right? This high is higher than this high here, right? This high is definitely higher than this high, or this high, or this high here, right? So the market started to U-turn. Now, is this a permanent U-turn? I don't know, it could be, but it did negate this downward trend, right? For now, let's pull this up on a daily. Let's see if we see any more information here. And here's the reason potentially why. Because if you look here, let's see, trans black. Remember what we talked about with trend lines and support resistance zones and all that good stuff? Well, if you look here, I mean, this right here, this is definitely a sharply moving down candlestick. And this is the Friday one. This is Friday's, right? And it pulls back up. Right, this right here was the area of previous resistance prior. All right, and if you look right here, this right here is really kind of an area right here that where the stop loss is at, is an area where there was previous resistance before as well. And buyers came back in and pushed the market back up, right? And it's kind of what we ran into on Friday, where buyers came back in and he pushed the market back up. But at any rate, there's nothing that we can do about that. Would I have traded this again? Absolutely, I would trade it again. In exactly the same way I did it, because my belief is that you trade the direction of the market. Now, what would I have done differently on this? The one thing I would have done differently on this, right? I believe I would have used a trailing stop if I'm not going to be in front of the screen. If I'm not going to monitor the screen, that's the one recommendation that I make to you today. Is that if you're not going to be in front of the screen, if you're not going to be monitoring it during the trade, use a trailing stop. Right? You say, well, what is a trailing stop? Well, a trailing stop essentially is as the price starts to move in the direction that you had predicted that it would, your stop, right, that stop loss would actually go and come in and starts, locking in profits for you. So as it moves down, the stop loss will be moving down with it, lock, step, and sync, right? And as you get closer to this profitability line, your stop loss is coming down, right? And the cool thing is that your entry is here, right? So all of this is profit, right? And as the price goes down, you're locking all that profit in. And then if you get a situation where the price starts to move against you, right, by however many predefined pips that you put into the order, then that stop loss will come in and stop you from, that trailing stop will come in and stop you from taking a loss on that trade, right? So let's say you put in a 5 pip spread. So that means that once you get into profitability, if the market moves against your position more than 5 pips, and that'd be really tight. I wouldn't do 5, but I'm just doing so you get the idea of what I'm saying here. That the market will come back. I mean, if the market starts to move against you 5 pips or more, that basically what's going to happen is it's going to get you out of that trade, right? So you're going to lock in that. And that gives you some cushion, it gives you some room, and it gives you some guarantee, really of locking in that profit, right? Once you get deep enough into that profit zone, that you don't have to worry about this coming back against you, taking a loss on it. Had I done that, or even just had I just been up when this was happening, or at the terminal when it's happening, I could have went and protected my position, but I wasn't, and that's my fault. Okay, but anyway, so that's what went right. Was that we traded in the right direction. Obviously, what went wrong is that the market went against us based off of some news that came out. We'll go back here to the 19th, Friday the 19th. And what came out, we had some information about the Canadian dollar around the 8:30 hour. And then we also had... That was the main thing that came out, was the information about the Canadian dollar. And that was the consumer price index. So information about inflation in that market. Had no idea that it was going to affect this hard. Also, too, what came out was, I think it was some stuff that came out about China as well, right? In the Asian market. And there was some information from the Bank of Japan. It's not showing in this feed right here, but I know there's some additional information that came out on Friday as well. Yeah, see? All this right here. Right? And even though it's saying on Thursday, but this right came out, if I'm not mistaken, it was Friday. I think it's when this actually impacted the market on that Friday during the American trading session, because once again, America has been into this big trade war with China. So, and then the Australian dollar, because the Australian dollar is a major trading partner with China, Australia is, it definitely affected this currency pair. And not only that, plus to the fact that I believe this week coming up, there's going to be some interesting information that's coming out in regards to the Great Britain pound, with the whole thing, with Brexit, or Brexit. Let's see here. Sorry, folks, just kind of going through this real quick here. I thought it was this week. Huh. Maybe it's next week. But at any rate, you know, at the end of the day, it is what it is. Um, we traded what we saw that was on the charts, which is what we wanted to do. We didn't try to anticipate what was going to happen, which is what we wanted to do. Even though I think before in the past we had talked about it was going to be a turnaround in the market. We didn't essentially know when, but we knew it was coming, and we got in a little early the previous days. Um, I'm okay with that. I'm okay with it because once again, we traded. Uh, we traded what was there. The only thing we could have did better would have been to. Only thing we could have done better is maybe put some type of trailing stop in place to make sure that we're locking in our profits. That's all. Let me check one more thing here real quick. A, B, C, A, D. And if you guys got any questions, comments, thoughts, or anything, man, please, please, please feel free to reach out to us. You know what I'm saying? Love to talk to each and every one of you. If you have any questions, you have any thoughts, you need to get some more additional information about what we're doing here, please, love to talk to you. Love to find out more about what it is that you're trading, and see if this is something that we can do to be able to assist you and make you a better trader, man. Help you be better at these trades. And also, too, remember that we're going to be going live here probably within another week or so. And so, you know what that means, man. Once we go live, we got to make sure we clear up all these mistakes, right? Clear up everything because, you know, ain't no second chances when you live, man. When you live, bro. Ain't no second chance. Ain't no do-overs. But I think we're going to be really good. And speaking of which, when we go live, what I'm going to do that first, probably that first trade, I'm actually going to trade off of a different account. I'm really thinking about doing a futures trade for that first one because I also want to incorporate futures trading to what we're doing. So for that first one, we may do a futures trade, and then after that, just come on in and do like after we do a futures trade, come on in and do like a forex trade. I'm sorry, I lost my train of thoughts. I'm sorry, guys. All right. Okay, so here we go. Great Big Pal. Canadian dollar. What do we got? What do we got? What do we got? What do we got here? What do we got? Let's see. Stop loss. Put my numbers in here. Blah, 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 blah. Mm, 8, 3. Oops. Yeah, and the cool thing is, I love the fact that we use the stop loss with all these because it could have been. I mean, if we would not have used the stop loss with this, it would have been so much worse as far as the loss that we use. Like, if we had like, okay, well, I'm gonna do a mental stop. You know, have any of you guys used the mental stop before? Right? I'm sure you have. If we'd used a mental stop, it would have been so much worse. You know, not that I'm happy where I'm at by any means, but it would have been so much worse. That's why it's so important that when you guys get out here that you don't just use mental stops, that you use actual physical hard stops. Know your numbers, put them in. So that way be good to go. So let's look at this. What went right? What went wrong? All right, so where's my 3 a.m. candlestick? 3 a.m. candlestick. Boom, right here. Once again, just looking at how the market was. Shrink it down a little bit. Now high, low, lower high, lower low, lower high, lower low, lower high, lower low. You get the picture. Lower high, lower low. All right, highs almost even. Here we go over here. Lower high. Of course, it's lower low. So this right here really got me. If you're looking at this, it is a downward trending market, right? At least at the time, for the moment, it was. For the last couple of days, it was, right? So for me to come in and say, hey, I want to sell, it was the appropriate thing to do. Now, one of the things that we could have did, probably better, is maybe looked out a little bit more and see if we're close to any type of support resistance zones. And of course we were, right here. If we come in and see. All right, let's make that black. All right, so when we see that on a daily, right, and then we kind of see where this thing is kind of been forming right here, too. Probably should have been a little more cautious coming in, but once again, the market hadn't shifted yet, and what I had always told you is to trade what's there and not what you think is going to happen, right? But I could have either stayed out of the market or, like I said before, trade with a stop trailing loss. Trailing stop. And if I could have did that, once we cracked through the market here, right, and went down, that trailing stop would have kicked in, and then what we could have did is, prevent this loss from occurring, or at least kind of, if we did have a loss, once again, take a little bit more off the table, so we wouldn't take as big of a loss. Those are the two main things to take away. Personally, I think if I had to trade again, I probably would still trade it again. You know what I'm saying? I think it was a good trade. Unfortunately, though, when news came out, as you see, this thing went extremely, rapidly upward. And had I not had that stop loss in place, loss could have been a lot worse than what it was, even though it wasn't that great when it happened. Is that my stop loss back here? Wow. I didn't think I put it that far back. At any rate, let's see here. Yeah, that's not my stop loss there. Hold on a second. Check this back. I was like, crap. Man, what the hell was I thinking? I'm putting the stop loss that far back. No, that wasn't my stop loss. My stop loss was here. It's a lot closer. 2, 4, 5. Bam, there we go. So that's the stop loss right here. So that was great. So yeah, so that goes back to what I was saying earlier. So take profit was here, the entry was here, right? And our stop loss was here, right? So they had a pretty tight stop loss in place. Price went through, got us in, and all of a sudden on the next candlestick, price went north and just didn't look back, and it went through our stop loss. And once again, had we had a mental stop in place, man, we'd have lost a ton of money on this thing, right? This thing went past the previous high, right? Created a new high, and so it has all the potential for at least a little U-turn in the market. I won't know until we go in there and analyze it more. But my goal for today is to come back in here and get our money, make some money, man. Right? If you guys can follow me for any period of time, you understand that hey, if you take a loss, that's okay. Because guess what? After the loss, it's gonna come our money, right? And get that money back, baby. Get that shmoney. But yeah. That was a tough one. That was a toughie. 'Cause once again, I mean, and this is the part of forex that people don't tell you about. They don't teach you, is that you can do everything right and still lose, man. But when you got good money management, and that's what we did, even though it doesn't look like it, because once again, this is only looking at for the week. It's not looking at for weeks past, whatever. So we accumulated a lot this past week, and so what we got to do this week is we got to get back in there, and we got to clean it up. It's the only way. Only way. No complaining. Comprende? No complaining. Only getting in here and making it right. Let's see here. New Zealand dollar. Also, I don't know if you guys can see it or not. What I'm looking, I got my notes right here beside me because I make notes on every trade, and I'm just trying to look at my information as far as stop losses and everything where I got everything put in it. Bam. Put the take profit in. Take profit is going to be. Oh yeah, also too, folks. Since I got you here, got your attention, I also want to tell you guys that once we start doing our live trade with the real money, the actual dollars, we're gonna make some changes towards the schedule. I'll still be doing the early morning trading session, but I'm also going to be doing some other trades throughout the day. I just got to kind of figure out how we're gonna do that to include everyone in, because those of you who are actually in our mentoring program, we want to make sure that you guys get the information that you need. That's going to be a little bit different from the information that the general public gets. Don't get me wrong, still share my trades, be transparent with you. Just that the folks that's not in the program, I can't get too in depth as far as what we're doing. It's probably more of the, hey, this is what we did today type deal. Kind of like what we're doing here versus when I'm dealing with the folks that's in the mentoring program, where those groups where we're going in depth and we're doing step by step. This is what we did. This is what we're doing. Got any questions? Come on in, chat with us. Take deal. And so if you want to get into the mentoring program with us, definitely contact me. Love to sit down with you and see if and talk to you first and make sure it's something that you need to be doing. Because we don't not looking to let everybody into the mentoring program, and the reason being just because not everybody should be there. I don't think that trading is necessarily for everyone. Glad everybody likes to try to make money and whatnot, but it definitely takes a certain type of person to be able to do this type work, and you got to make sure that mentally wise that it's something that the person that's going to be doing it is really kind of committed to, and they understand what comes with this. What comes with this. Entry. Oh yeah, 9-8. Okay, so let's see here. Let's find my 3 a.m. Excuse me. All right, perfect. Oh, this is actually the one that actually we made money on Friday. So that was perfect. So anyway, this is good. So yeah, everything that we did Friday wasn't a loss. We did take a couple, I think like 2 or 3. Took 2 losses and one take profit, which was good. Then like I said, the other stuff is just accumulation from the remainder of the week, right? But so what went right on this one? There's a 3 a.m. candlestick here, right? Once again, we're just really kind of looking at what's happening in the market, right? Where's the market going? And the market appears to be moving down, right? High, low, lower high, lower low, lower low, lower high. right? Lower low, lower high. Right. So the market is just moving down. So we understand that, right? So by the time we get here at the 3 a.m. candlestick, right, we have no way to know this information over here. So what we proceed to do is just say, hey, you know what? The market's moving down. We're going to move down with it, right? We're going to trade in the direction of the trend. It's trending downward. So we got no reason to believe it's not going to continue to trend downward. All right, looking at my 3 a.m. candlestick, it has not. That's not equal to me. It has not made a U-turn, right? It had no reason to really believe it's going to make a U-turn. So we continue to trade. So we put in our entry order here. Put our stop loss back up a little bit.